Hi, Richard here on 17th of December, being Friday, and it is 2 o'clock in the afternoon. I wanted to start with this chart of the New York Stock Exchange trend, which is a technical indicator that measures the number of advancing issues versus the number of declining issues. Generally, when you're above zero, it gives you a bullish opportunity, and when you're below zero, it indicates bearish opportunity. Here, the important thing is, and this is courtesy of Elliott Wave International, that we have a reading that has just been printed at 59, which is the most extreme since before the crash of 1987. So you can see here the wave count that Elliott Wave International are promoting, and since this B wave low here, we've come up in 5 waves, which is at the point of culmination, and clearly once that's occurred, that's the end of a very large wave 2. So wave 1 back here follows all the way up to 2, and this has been a lot more protracted than a lot of Elliott forecasts or analysts actually predicted. Back here in January 2010, a top was called, but of course it came down in 5, but has made a recovery back up to April 2010, where indeed we had the flash crash. This long drop here is the flash crash, which then was taken out by the the S&P 500, and then a bit of a rally up to finish the B leg, and then we've got this 1, 2, 3, 4 up to 5. Down here is the end of the GFC, March 2009. So that was the low that was made, and again Elliott, and in fact the market forecaster, made the call that we would make it up to between 10 and 11,000. So we made that back in early January, and then it's taken all this time effectively to go sideways. So we're slightly above it now at 12,000, but we're only 1,500 points above. So it's reasonable if you're on daily trend and trading stocks from these lows, getting in on these lows and going up. But this is the important one. That trend equal to low volume. The volume is the lowest last night that it was since we were at this point here, which is in April 2010. So then of course we got the sell-off, and it's also at the lowest since October, November 2007, which is prior to the beginning of the GFC. So what this means is that whilst we expected a greater leg down on this 4th wave here, it didn't occur, and instead we've had, on very thin volume, we've had a increase in the S&P 500 and the Dow, and the expectation is for this to unwind down in 5 waves. So if this 4th wave low here was taken out, which is just below 12,000, let's say 11,800 thereabouts, then that will be an indication that we're beginning a new primary change in trend on the way down. The alternate view is that we'll still get the correction, so it might waft around here a little bit through Christmas, but then we'll come down in a 3-wave decline before beginning a new advance to the upside early next year. But the jury's out on that. What we need to see is what the nature of the wave is going to be down here. So if it's 5 waves, we'll get an ABC correction back up and then down again. If it's 3 waves ABC down, then we're likely to get a 5-wave correction up, which will mean that the whole bullish movement, which began last March 2009, will continue upwards. So we're at a very interesting juncture. Let's go to a closer look at what's going on. This is the US dollar weekly, and you can see that this has been in a long situation as indicated by the market force, and is pushing upwards. This long tail occurred here over the last 2 nights, and that would indicate that we're getting buying pressure to push the US dollar up, which of course means that the commodity currencies and indeed gold would be pushing down, and we'll come to gold a little bit later on, but a significant $15 break down through long-term resistance or support line was achieved overnight. On the Dow, it is testing the long-term support. It hasn't broken down yet. Market force indicator still strongly bullish, so we stand by for that. But the upside target in the event that this is taken out, as we've said many times, is 11,850. In the event that we get a break of this line, a convincing break, as we did here, then we would we'd be looking for 11,000 to be taken out, 11,800. But in the event that we do get this downward movement, I'll forecast those figures next week. But definitely, given that the advanced decline ratio through the trend has fallen the lowest since 1987, then we'd expect some downside activity to be happening very shortly. And in fact, this would be demonstrative of the SPY. This is the ASX 200. You know, it has worked this trend line resistance for quite a long time now, as we can see, really since the beginning of September. Our market has done nothing but go sideways. So there's certainly not advance. We've been long since this pullback that occurred in late November, and at the moment we're heading sideways. This is the Australian dollar, which came down to test the support line. You know, by all accounts, this should be an ABC up, but yet the jury's out on that. Certainly came up 2 nights ago and tested parity again, only to be to quickly fall away, heavily fall away. So in the event that we see a blast through, if that occurs, then we know that we're going to new heights, and that will be taken out at 1.017. That's 170 pips above the previous high, and we'd go up to test this support line here up around the sort of 1.0250, or as high as 1.350. So we're looking for that with interest, because if this is a wave 4 pullback, then we'll get the 5th wave completion up here, and in fact these numbers change. But let's wait and see what happens. Again, looking at the Euro daily, you know, it broke through its long-term support line, came back and tested it once, came back in an A, B, up for C with a long upper tail which indicated selling pressure, and sure enough the next day it was confirmed as such. So on the market force, there's not much trend strength in that at all. A couple of light bars there, and we're looking for the re-emergence of a solid red, which would begin this downtrend to take out the target of just around 1.3. This is the materials sector, which has been driving the Australian market up. Every other index is more or less going sideways to down, while the materials is pushing up. And indeed, this was the target here at 14,200. It's all been taken out. There's a doji reversal there. Potential is that we're going to come down and retest that 13,600. Certainly, if we looked at a chart of BHP, you would see that as a consequence now, and I can in fact show you one of that if I can get hold of it quickly enough. This is a pretty rough chart, but what's occurring here is interesting, because from an Elliott perspective, and this is a technical chart, but we've got 200 and 100 period Bollinger, which is the green and grey line in there. We've had this channel, an upward trend opportunity since very early September. Market force has been in nothing but positive territory. Came back up, finished the wave 3, pulled back in a 4, and then has now come up into a 5, and technically has done its job. And often when we see this 2 and 100 bols cross over, then we look for a reversal, and in fact that has definitely occurred. The reversal, and this is a very bearish engulfing pattern here on the candles, and we've just got a little faint wisp of the market force showing a heavy red there. We normally wait for 2 solid red bars before considering entry, and indeed the best and safest mechanism to trade these types of pattern when they're in an Elliott channel is to wait for a breakdown of the channel and then the first target would be the wave 4 low at $43, and then you'd expect a bit of a rally and then a push down again. So we could measure that, but we'll wait and see what happens. But certainly BHP is giving us a bit of a bearish signal at this point. So moving over, and that's in the materials sector, just there. And here in the financials, we can draw a trend line in pretty conclusively there to the point. It has come up and tested it. We've still been long on the market force, waiting for an easing of that trend, a light bar to occur, and then that would indicate that we're probably coming down to test here, which is around that sort of 4,300 mark. This is the weekly chart of gold. Really classic chart, strong channel, parallel lines coming up here, a couple of tests, came down, broke down, has pulled back from the last night's dip, and indeed, as we'll see on the daily chart, this breakthrough of this long-term since late July trend line, which is broken through and now is retesting from the underside. So it's an important break. We'd look for resistance against that line, and then that would be a most definite short opportunity all the way down to 1250 to retest the weekly support line, which is down on this red line here. And finally on oil, been going sideways, could be considered as a protracted wave 4 in the event that there is a pullback and then support and off it goes again. That would offer a target up around the sort of $92+ dollars. But these are very much long overhead tails here. These represent selling pressure, and it's continuing to go down as the Bollingers come in. They're not on this chart, but we know they're starting to contract. Oil generally doesn't last there long. Once it gets these accumulation or distribution patterns, it generally rockets off for any number of days in one direction before getting reversals. So that would be the completion of a wave 5 pattern there, but let's wait and see what occurs. We've not got a definite signal on the market force, even though the light bars indicate a very weak trend. So if one is long, the condition is there that we do nothing. So that's it. For more information, please go to themarketforecaster.com.au.